This content is provided for informational purposes only and should not be relied upon as legal, business, or tax advice. All opinions expressed are opinions and do not necessarily reflect the opinions of RCM Alternatives, their affiliates, or companies featured. Listeners are reminded that managed futures, commodity trading, and other alternative investments are complex and carry a risk of substantial losses. As such, they are not suitable for all investors.
This is recorded December 16th, and this is Matt Bradbard from RCM. My intention is to record these short videos every few weeks or when relevant developments come from China. The goal is to provide more color on China from my perspective and explore different ways to access the marketplace. This is my second Enter the Dragon update. The first piece provided a 30,000-foot overview of how RCM sees the opportunity in China, and moving forward, I will keep the same structure, and I intend in each recording to cover a few overarching topics. Number one, update on RCM's China business. RCM's current relationships, we are still providing market signals to 130 million RMB and have 7 strategies running through 3 different onshore groups. RCM is close to finalizing deal terms with 2 more distribution partners. We've had multiple due diligence calls this week, and we hope to have a few more deals inked by year's end. Our goal is to be live with 1, if not 2, new onshore strategies that are currently in SIM mode through RCM's infrastructure. Both SIM and live signal providers have done a fantastic job of navigating the markets in recent weeks. After the Chinese New Year, we expect more capital flow, and the goal is to punch through 200 million RMB by early Q2. What I've learned about doing business in China is to exercise patience, as it always takes longer than anticipated. Another valuable lesson is many Western groups give up if they do not see instant results, and RCM is in it for the long road. I expect all our efforts and all the strategies that have worked so diligently the last 12 to 24 months to be rewarded in the next 12 to 24 months. I did mention in my last post about our technology. RCM's OMS has written to a number of China platforms, and I've received a number of inquiries on this topic. To date, just for clarification, we've written to CTP, Rohan, and Hengsheng. We are exploring eSunny and also are having dialogue with TT and CQG on their connectivity to see what Chinese futures can be traded through their gateways. The second section I highlight in this piece is where is the volume and what markets are moving. In this section, I point out the major movers and where the action is. Getting more granular, looking at volumes of the most active contracts, what I'm reporting here is the average trade volume over the most recent 20-day period in a single day. Soy meal, approximately 640,000 contracts. PTA, 830,000 contracts. Rebar, 540,000 contracts. Nickel, 350,000 contracts. Perspective. Looking at December 15th volumes on the most active month contract for 2 U.S. traded products. Gold, just under 175,000. Crude oil, just over 310,000. Directional volatility exists in China, and those able to manage that risk should be very excited. Just to highlight a few standouts for Chinese markets over the last month, iron ore, up 32%. Both hot rolled coils and thermal coal, both higher by 17%. It's not all markets moving higher. The biggest loser in China over the last month, soybeans lower by 6%. Of the 46 Chinese futures contracts I track, approximately 70% appreciated over the last month. Perspective. Look at U.S. futures movement. If we go back the last quarter, there are only a handful of markets that have appreciated around 20%. Lumber, heating oil, oats, Brent, and WTI. the biggest loser being the VIX shedding approximately 20%. In the third section, I try to outline any new developments. Copper launched November 19th as the most recent internationally approved contract out of China, up just better than 11% over the last month, with average daily volumes over the last 20 days just under 100,000 contracts a day. Palm oil. Palm oil is the most widely consumed vegetable oil in the world. Launches December 22nd on the DCE. RPD palmoline is used mostly for cooking oil and industrial frying fat for instant noodles. Fun fact, courtesy of Orient Futures. Could there be opportunities to trade copper in China against LME and CME? Could there be an opportunity to trade palm oil across exchanges? I think so, and we'll be diving deeper on that topic in the coming weeks. As a reminder, there are 6, soon to be 7 internationally approved Chinese markets: iron ore, PTA, crude oil, fuel oil, natural rubber, copper, and 1 week out from palm oil. So we talked to several custodians this week, and that's a typical week. We talked to custodians in the United States, mainland China, and Hong Kong. The challenge, in my eyes, is jurisdiction in abiding by letter of the law with both the CSRC and the CFTC. RCM is working through with US and China legal. It's a real alphabet soup, and RCM is trying to make sure all our T's are crossed and all our I's are dotted so that our partners can scale. In the fourth section here, I talk about what does the future hold and how can RCM add value. Big picture, we're trying to assist with two-way flow. By that, I mean east to west and west to east for both investors and traders. We're looking to develop 3 distinct business lines, helping bring Western strategies to China, arb trading between global markets and China, and finally, Western money looking to access China-approved international markets and then via QFII. And I quote Goldman Sachs just this week: China is a once-in-a-generation opportunity for investors. My suggestion is get on board. Wrapping up, please get in touch if you have any questions, if you'd like to know more information, and also if you have any specific topics or China content you would like covered in future recordings. Thank you.